Seller financing. Can you transfer a mortgage to a different person? Hey gang, my name is Mike with My Real Estate Dojo, and this is exactly what I'm going to talk about. Can someone transfer a mortgage to a different person? But I want to put this disclaimer out there. I'm not a CPA, I'm not a financial advisor, I'm not an attorney. I'm just a refugee that came to America, and this is the strategy that I used to buy real estate back in the last crash, 2006, 2000, 2007, 2008, which is called seller financing, aka subject to real estate investing, aka taking over house payments. In other words, transferring the mortgage. The answer actually is yes and no. Okay, yes, I've taken over house payments from motivated seller, and they have to be motivated. That's the key. They have to be motivated. I can get the seller to deed me the property, which makes me the rightful owner of the property in the front of the law, the tax authorities, insurance companies, liability, and so on. And I can make the monthly payments for the existing mortgage, even though the mortgage is not in my name. Okay, even though I didn't get the loan. The other flip side of it is no, because the bank doesn't allow it. The bank doesn't allow a transfer or a conveyance of the deed to a new buyer without them being notified and cashing out the loan underneath loan mortgage. So how does that work? Well, there's two ways that, what I call formal and informal. A formal taking over mortgage is going to the lender and saying, I'm going to assume the loan. But the problem is, since the 1980s, in the deed of trust, the mortgage company has put a due on sell clause that says if the seller transfers over the deed, the bank has the right, may foreclose and accelerate the loan. They may be able to do that and give the borrower 30-day notice, and then they got to sell, and they're going to foreclose on them. Now, so the bank has the ability to do that, and therefore, most of the loans today, now there are some out there that may be assumable, but most of them are not assumable, so therefore the bank doesn't allow it. Now, the other option, that is what I do, is informal, and I don't assume the loan because I don't put the loan under my personal name. I don't take responsibility for the loan. All I do is just step into the seller's shoes and make their monthly payments. So again, I just step into the seller's shoes, I make their existing loan payments. I don't never assume the loan and say, look, I'm going to go to the bank, I'm going to, instead of the borrower being on the hook, I'm going to go put my social or my company EIN number, and my company's going to be on the hook. I never do that. That's why I call informal. Okay, I go to the title company or I go to my attorney's office and they draw up the new paperwork, which means that the seller is going to be my private bank, and instead of me making payments to the seller, there's a high risk that he may just pocket it. So I'm going to make the payments to the seller's bank direct, and I'll start making the payments to the seller's bank direct. Meanwhile, the seller will convey the deed to me, so I will become the rightful owner of it. I start making the seller's payment, and life goes on till I cash out the loan, or till I retire the loan by making the monthly payments for the term of the loan. If it's a 15 years, if it's a 30 years, etc. Okay. Now, I never assume the loan because A, most loans are not assumable. B, I don't want the responsibility. I don't like banks. Okay. Now, doesn't mean that I buy these houses and not make the payments. No, I make the payments. I do everything I promise to do and more. I just don't like banks, and I'm helping the seller because they're in a tough situation. Maybe the house is in pre-foreclosure. Maybe they're going to a divorce and they can't afford the monthly payments. They don't want the house to be foreclosed on and ruin their credit, and it creates an opportunity for me and an opportunity for the seller. Okay. Now, can the seller be foreclosed on by the bank? Absolutely, which causes a risk for him and for me. Okay, but that's a risk that I'm willing to take, and so far it has worked out for me. I have never had a corporate bank foreclose on me. Like, for example, like Bank of America, Wells Fargo, any of those people ever foreclose on a property that I bought subject to his existing mortgage. And the other thing is that in a HUD-1, line 203 or 503, depends on if you're looking at the buyer side or the seller side, it says subject to his existing mortgage. So it's something that HUD knows about, something that title companies know about, and there's people that do these types of transactions, but it's not the traditional way of doing real estate transaction, because the traditional way is for the borrower, to get a loan, and when they want to sell their home, the new seller or the new buyer has to get a loan, okay? Because the borrower now becomes the seller, so the new buyer has to get a new loan to cash out the loan. But for me, I only deal with motivated sellers, and I don't do the traditional way. I'm only willing to buy houses from sellers that don't have a mortgage, or if they do have a mortgage, they're willing to just let me take over their payments, or I'm willing to pay cash, but it needs to be at a deep discount. I'm not going to pay, for example, if a house is worth $100K, I'm not going to pay 90 for it, or 95 for it, or 60 for it. Okay, I'm going to need to buy it at 50 cents on a dollar. So if a house is worth 100, I will pay 50 for it. Okay, now, if the house needs repairs, then it's going to be less than that. So, what I'm trying to say is that cash demands a discount, and I'm just not going to buy houses at normal price, or I'm not going to buy it. But I'm willing to buy houses at the fair market value, a little bit below the fair market value, a little bit above the fair market value. If I don't have to use my cash, nor if I have to get a loan myself, I could just take over the seller's payments. So, can a mortgage be taken over by another seller or another buyer? Yes and no. Yes, it can be done. But it's not the traditional way. The bank doesn't like it, and that's that. Do people do it? I believe they do it. That's why they have it in a HUD 1, which is a government-backed agency that draws up the HUD 1. Like I said, line 203 and 503, if I'm not mistaken. So these type of transactions happen. It's just not the traditional way you do it. But again, as an entrepreneur, as a dreamer, I never try to go the traditional way. That's for the sheeps, right? I don't like bankers. I never borrow money from bankers. Never going to borrow money from bankers direct. But if the seller has a bank and they already borrowed money from it, and they can't make their payments, or if they're behind on their payments, or they're behind on their taxes and they need help, I'm willing to pay for that for a profit. And so that's what I do. And I prefer to buy houses from sellers that don't even have mortgages, so I can negotiate a deep discount, or seller financing and give them more money versus a deep discount. So I hope that answers your question. If you have any questions regarding how to find motivated sellers, how to talk to motivated sellers, how to negotiate seller financing, then definitely go to myrealestatedojo.com. Again, myrealestatedojo.com. I have tons of free blog information there. Plus, I have self-help courses like my Ninja phone script, how to talk to motivated sellers, and how to structure deals, and so on. So if you're interested in helping yourself be your dreams, then go to My Real Estate Dojo and download some of my courses. If you want to work with me, the first place you should start is called The New Flip. The New Flip is a way where you can learn about the real estate business, like training wheels, with only risking $100, because real estate is expensive. Even if you buy houses with no money down, it's still risky, and it requires a lot of moving pieces, a lot of skills. And that's why I believe the New Flip, why I created it, is going to help students make money today, why they learn. Okay, so important. They make money today. Why do you learn? With only $100, guys. Okay, to risk. Now you can lose your $100, or you can turn your $100 into thousands, if not whatever you want. Okay, whatever your goals are. And I have many students that's done it, and it's called the New Flip. You can find more about it at My Real Estate Dojo. Now, if you don't want to do the New Flip, you want to work just straight into real estate, then the next option for you is called my Seller Financing Academy. You can find out more about it at My Real Estate Dojo. But again, if you're new, I highly recommend starting with the New Flip. You learn all the skills you need, like sales negotiation, how to find, how to filter. Okay, and only risking $100, we can have a possibility to turn your $100 into 200, 700, 1,000, 10,000, over and over and over, while you develop your skills. And then you can get into real estate, which can be very, very fast or very, very slow, depending on your work and dream habits. Anyways, guys, thanks for watching. Click the like button. Always remember, you're braver than you believe, stronger than you seem, smarter than you think, and twice as beautiful as you ever imagined. Go me. Peace.